Let's get to those charts and see how much damage is being done with that. Katie Stockton is here next to me in Philadelphia, founder and managing partner, Fairlead Strategy, portfolio manager for TAC. Katie, always good to have you here.
Of course, good to be here.
And a good day. I mean, I guess it depends which side, but there's a good bit of damage happening here, it seems like. Nasdaq cracked 14.7, S&P's cracked 42. Are these meaningful breaks?
Well, I think you say crack, and that's important because they're not necessarily breaks yet, right?
Okay.
If we see a level penetrated and then it spends a little time there, well, then we might have a breakdown. But when it's testing, it's actually fairly normal for the major indices to come down to a level, test it, snap right back, because that's the nature of support. It's where buyers should start stepping in, but support is never a precise level. So 4,200, we actually have it sort of widened out to about 4,180. That's based on a Fibonacci retracement level. It's a very key level towards, in what we feel is the cyclical uptrend, the preservation of it. So below that, we would feel that risk is heightened. And therein we have effectively like a top-down stop loss.
Okay, and that kind of is around that 200 DMA for the S&P, a little bit below it?
A little bit below it,
okay.
But the 200 DMA, I mean, it certainly is another area where people may say, well, I feel comfortable with the pullback to that level, might step in, so it could be another cushion for price.
The Nasdaq has been uniquely supported relative to the S&Ps, right? I mean, 14.7's basically been a line that we don't go under multiple times.
Right.
There are some relationships and charts, kind of NVIDIA's earnings kind of brought us there a little bit, so there's a whole other macro kind of fundamental, but just technically, how important is it for the Nasdaq to hold that 14.7?
I would say less so, because we know that it's really, really driven by these mega cap tech stocks, right? So the support is still intact, technically. If it were to break and we didn't have a break in the S&P 500, I wouldn't be terribly bothered by that. So let's say Apple disappointed and we got a dip below, but then buyers stepped in. So you see how it could sort of evolve in that it might actually present an opportunity. So I wouldn't say it's quite as important because it is so mega cap heavy and also tech heavy. So we will, like everybody else, be scrutinizing the reaction to earnings. And of course today that was an issue for the market, right? Google or Alphabet's drop impacted the major indices in a pretty strong way. But I wouldn't minimize the gap up that we saw in the heavyweight of Microsoft. I think that was really meaningful.
Yeah.
It did clear a short-term resistance level and is not that far from all-time highs. So it would be hard to imagine a tape in which Microsoft is reaching new highs that wasn't quite strong for that tech sector.
Now, the kind of case-by-case, stock-by-stock situation you're discussing that is right now kind of bouncing off each other. It's not the worst, it's not the best.
Right.
Is there a bias on which particular company matters the most at this juncture? I mean, because of all of them, I guess NVIDIA is the one that's still arguably very clearly trending higher. I mean, higher highs up until like a month ago.
Right.
And nothing even close to lower lows.
I would argue that NVIDIA, when you take a step back and look at the monthly bar chart, it looks pretty toppy, actually.
Really?
It does. It looks a bit like a head and shoulders, but you don't have risk to that until you actually see a breakdown. So NVIDIA looks like it, listen, it's gone from a steep uptrend to now a consolidation phase. It's not to say you can't benefit from short-term moves there. So I don't think that will be key because I think it had seen such strong upside that now the baton needs to be passed down.
Yeah.
Smaller mid-cap names, they need to really pull the market out of this mess because the breath has been so bad. So do we need Apple's participation? Definitely. I mean,
yes.
It's the number one stock in the S&P 500. Microsoft is the second runner-up. So those two stocks are definitely key to the market. And of course, if NVIDIA participates as well, that's better. But I don't think it's a requirement. I really would like to see small and mid-cap tech kick in here with some relative performance.
To your point about that passing of the baton and the lack of there being anybody back there to grab it right now, small caps look like miserable. I mean, it's like, it's a different, I mean, it is a different stock market, I guess, but like such a big disconnection. Do we now look at the Russell and think maybe that it was sniffing something out? I mean, what do you look at when you look at that?
So we were compelled enough by the Russell 2000 to highlight IWM, the ETF representing that index, in our report today. And we highlighted it because within its longer-term trading range, you can see it's been range-bound for some time. Within that range, we have an oversold indication from two of our metrics, and that comes right near support. So this is a critical juncture in that IWM small caps should react to their oversold condition, but they really need to do so somewhat immediately to avoid breakdowns.
Okay, so that's got to happen soon, basically.
Soon.
Or else.
And for the S&P 500 too.
As we cut to new 52-week lows, that's not breakage territory just yet?
It would be if it hangs there, yeah.
Wow.
Yeah.
What is your thought on what leads what? Do small caps lead, or is that kind of an antiquated way of thinking about things?
I would think it's more growth leads in a strong tape. So it's more growth versus value as opposed to small versus large. There are influences in sort of on both fronts. It's not a very simple answer necessarily either, because you can have a strong tape without broad participation. And then we get into leadership, right? Whereas that sort of narrow leadership can still sustain the major indices in their uptrend, but it's a much more difficult market for people to take advantage of. And that's, of course, been the case for much of this year. The breadth has been really terrible. It is very oversold to the point where we now have contrarian indications, and not just in breadth, but also in sentiment. So sentiment, as you'd imagine, is pretty fearful right now by some metrics. And as much as that's hard for all of us, we also feel like that's when opportunities present themselves.
Okay, it might be intensifying here today if we don't get some of these bounces back pretty quick. So the Russell's on the verge of a breakdown. The Nasdaq and the broad market still need to see kind of another leg lower for you to describe it as a major break. So we're kind of still testing these support levels, it seems you argue.
I think testing is the key word. So they've all come down to key support, which is, by the way, where we should be thinking about adding exposure, barring that breakdown.
Okay, let's talk a few macro charts real fast. I know it's like one of the more boring ones, as we were talking about off stage, but the dollar right now, in the last couple of years, has been such a good tell. So even though it's kind of stuck, it feels like to me, if you can figure out which way it breaks or how to know if it is breaking up or down, your stock questions to some degree are answered. Do you have any strong bias about which way you think the dollar will go?
I think it's neutral. It's in the confines of support and resistance, and within that, it has neutral momentum, sideways kind of price action for the dollar. Resistance is strong, but so is support. So we are going to assume that it's range bound until it proves us otherwise. We do think yields will consolidate, at least in the short term, meaning maybe 6 to 8 weeks or so. And with that, we would also expect the dollar to continue to consolidate. So that's sort of our bias right now. And that would be something I think the equity market would welcome.
Yes.
But listen, if the levels are cleared, we will respect that.
And you still view the dollar and rates as being fairly positively correlated, connected?
For now,
okay.
yes.
So they broke apart a little bit here the last couple of weeks. Yields are blown out and dollar didn't do anything.
It just kind of stayed flat, right?
Yeah. Any thoughts on why that is?
I don't know why. The charts won't answer that. I think it tells us, it's an important lesson because correlations matter over the very long term, but it's really risky to depend on them over the short term and invest that way.
Okay, great stuff, Katie. Thanks for the catch up.
Of course, good to see you.
Fantastic look at the charts and techniques. Katie Stockton at Fairlead Strategies, portfolio manager at TAC.